Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Rivian Automotive, ticker symbol RIVN. And so I am recording this on Sunday, March 23rd, after Rivian closed on Friday the 21st at a price of $11.60, being up about 6.6% on the day and continuing up about 2 pennies in the after hours. And so, yeah, I wanted to follow up on the chart because we have returned to this level, the 786 here at around $11.03. I believe I talked about that in a prior video, but I also talked about some other levels to the upside that might be acting as support. And, for me personally, I have really just been trying to be patient, waiting for this level, and then to be patient even more to see how it kind of responds to that level. If it's just going to consolidate there and break down, or consolidate there and start to break out. And so I think that the latter is what we are starting to see with, this big green candle here on Friday, bullish engulfing candle getting back above that 786. However, I am also prepared for further downside, like getting to this green uptrend, which is based on these two lows, one being the low from April 16th and the other being the low from November 6th. And so that is how you get that uptrend, and that is just below where we are. And I actually did have an alert here at $10 a share, kind of corresponding with the consolidation over here, but I decided to remove that alert because I think there are some signs in unusual whales that suggest we are going to be continuing higher. But before I get into the unusual whales data, I did just want to point out a couple of things that were good indicators for this being a top. As I make these videos, I try to learn more about the charts. And one thing that we could see, actually two things that kind of were a giveaway that the top was in here, was that as we were making higher highs here in the stock price, we actually made lower highs in the RSI, and so that is bearish divergence. That suggests a pullback, and so we have indeed seen that following that move on, let's see, January 3rd hitting a high of 1665. We have pulled back to current price about 30% to the downside, but getting to the lows, that was about a 37% move to the downside. And in addition to what we see with the RSI, we see these higher highs here. We do see the increase in volume there corresponding with this massive green candle going up over 24% on the day of January 3rd, starting the new year strong there. Actually, the day after the start of the new year, because of course, January 1st, market is closed on the 2nd. We put in this little spinning top or doji candle there before gapping up, making that big green move. And so with that, there was a lot of volume behind that move, but the following day we couldn't hold it and volume looked like it really diminished. We were above that red line there at 1549, the high from December 16th. But yeah, that volume was diminishing, and we just couldn't hold those levels as we put in that bearish divergence. So not terribly surprising to see that pullback in retrospect. But now seeing the price at around $11, I do think that it is at a good dip buying discounted level, but I did also want to kind of just take a step back to point out some of these other levels, like this purple downtrend was effectively the neckline for this inverse head and shoulders here. That move played out very nicely. And then over here we had a similar, neckline in that purple right there, but that was for a non-inverted head and shoulders. And following that bear flag that we formed here, we did get a pretty massive pullback there. And then I do, let's see, have this level up here. I actually don't think I want to be keeping that up there around $25 a share. There are some tops there, but we'll address that once we get back up to there. I really just wanted to point out this light blue downtrend, which goes back to the highs from September of 2022, that being the first pivot point, and the other one being from the highs of December 2023. And then we did get rejected from that again over here, as well as over here. And so this was November of 2024. This was the highs of July of 2024. So lots of rejection. And since we have broken out, we have not yet retested that level as support. So if we do start to break below, let's say $10 a share, maybe I do want to have that alert there, but I am going to make it for $10 and below. If we do cross to 10 or below, then I think we might be free falling down to, let's say, maybe $9 a share. So good to be cautious about that. But anyways, like I was saying, corresponding with the 786, if we look over at the unusual whales data, that does suggest to me that maybe there's some whales stepping in here. So looking at this chart here, this is the Rivian data, as you can see, and this is just for Friday, March 21st. We can see in yellow the stock price increased over the course of the day, which matches what we see over here with that nice bullish engulfing candle there. And with the increase in stock price, we also see the increase in that green line, which is the net call premium, whereas the net put premium is here in red. That actually went down. That went negative on Friday, suggesting that, net put premium coming down. That suggests that puts are being sold. That's bullish. And we see the net call premium going up. That is bullish as well. And with the increases in volume, that suggests there's a good amount of buying of calls, which does suggest that we could very well be seeing that a bottom is in. And a couple things to, though, be cautious about with this data. If we're seeing gradual increases in net call premium, that could just be retail, little guys like you and me, buying, thinking, hoping, praying that Rivian is going to be higher, going higher. But when we see big jumps like this, gaps in that net call premium, that suggests that a whale is buying, and that they might be aware of something that we're not aware of, and that we might be seeing a rally soon. So if we look at that time, that was at around 12:28, and we see that net call premium at that time was around $400,000, and then it jumped up to around $850,000. And so that, again, does suggest that there's more than $400,000 going long at that time, a specific contract that would suggest that Rivian is going higher. And we can actually look into that data a little bit more if you guys are curious. And so for 1228, I'm just going to open up another tab, open up unusual whales, go to the flow data and the flow feed. I've got this on Unity software right now, but I'm just going to change that to RIVN, type that in, and then I'm going to adjust the time, the date, from Thursday, which is what I was previously looking at, to Friday the 21st. So that's the only data that we'll be looking at. And then if I do scroll this up so you can see just above Ed's head there, we can see that we have the minimum premium set to $50,000. And let's see, I could do, let's just have some fun with it and just focus on, let's see, the one that, let's see, actually, so the data that I was looking at, this spike here, that corresponded with 1228. So which one of these is around 1228? So none of the ones that are around $100,000 were around 1228. They're a little too early and a little too late. So I'm going to leave it at 50,000 as the minimum premium there, so we can see these contracts here. We can also see this little symbol here. This suggests that this trade was part of a flow alert, and so we can click that for full context. And that actually does correspond at 12:29 with, the time that I was talking about over here, right around at 12:28, 12:29 is when that jumped up. So that's probably going to correspond with this contract, which was the $15 strike call that expires in June. And we can look at the data. This was on the ask side, so that suggests buying. We can also see over here that this does suggest that it was a bullish move. So the $15 call expiring in June with current price around $11.60, $15 will be getting back up to, right around here where the cursor is, or right around just below, where that red line is. And so let's, check out, this flow alert. So it looks like there's a lot of action going on with this contract on Friday. Friday. So this was on the 21st. We can see the dates over here. Some of them are behind Ed, excuse him. Overall, we can see that the majority of this was bullish on that ask side. And if we just look at that contract there, we can see that actually the total amount of premium traded, I'm going to get Ed out of the way for this. The total amount of premium traded on Friday, looking at all of the orders, total premium traded for this contract was around $500,000, over $500,000. So that's looking pretty good. The open interest was around 43,000 contracts open. And we saw a volume traded on Friday of around 9,000. So I'm suspecting that we'll see open interest go up to at least 50,000 contracts open coming the start of trading on Monday the 24th. And we can actually see, this big spike in orders here that was at, between 12:25 and 12:30. It looks like that candle represented a volume of over 7,000 contracts, actually 7,069 contracts. So pretty fun there. And that candle premium represents over $400,000. But anyways, thinking about that, looking at the data over here, we do see that nice spike. And so that does make me think that, this is looking pretty bullish. And I think I forgot to note it, but the net call premium did increase on Friday by over $1 million. So that's across all call contracts. Net call premium increased by $1.16 million, whereas net put premium across all put contracts came down by $266,000. So, a lot more going into that net call premium, and also, some coming out of net put premium. Both of those things bullish. And then if we do just take a step back looking at the past 30 days, what we can see when we saw this big spike in the net call premium back here on, February 13th, we actually saw the stock price in yellow getting up to a high right around there. And so that looks like, that was a net call premium increase of over $3 million. We haven't seen spikes that high since then. And I feel like that was really just kind of a bad time to be buying calls, with that spike there in the stock price. But as we see that pullback in yellow, it's starting to potentially turn around. And as we're starting to see that net call premium progressively increase, getting above $1 million on Friday, I think that's looking really good. So considering the data over here and considering the chart here with this level here, the 786, I think that between now and June 20th, with that strike of $15, I think that we could be seeing price going up from the closing price on Friday, or right around there, getting up to $15. That represents almost a 30% move to the upside. It looks like right around 29%. So, I think that's a pretty good trade for the span of, really 3 months. Let's see, April, May, and June. And so, I am pretty excited about this chart, and I hope you guys are too. But anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.